stocks are under pretty heavy pressure for the past few weeks, and they're attempting to find stability at the support levels, which I will show on the charts, especially the 4-hour chart. We'll look at gold as it is poised to potentially continue lower as dollar looks very close to rallying even further higher. And Bitcoin is now in a confirmed bear market. Again, I will explain why I think that and exactly which levels to watch for on this bounce, which is indeed coming for the Bitcoin. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 21st, 2025. As always, like, share, make a comment, even put a heart or a thumbs up in the comment section, and this will tell the algorithm that this video is important and more people will watch it. Thank you. I've been seeing more comments lately, so again, thank you very much for doing that, and please continue making comments and sharing this video. I apologize, I got a bit of a cold, so I'll do my best. If you're a subscriber, stay tuned. Again, we'll be covering some ETFs, large cap stocks, speculative securities in the members only section. If you're not yet a member, consider signing up by going to the link in the description to MasterChartsTrading.com. Okay, let's look at S&P 500. First, let's look at the daily chart. So daily just means each candlestick is a day's worth of activity. We made an all-time high right here on the 29th of October. And since then we've been pulling back in this wave-like manner, making lower lows and lower highs, lower lows, not yet a lower high. I mean, you can technically say this was a lower high on the 20th, so yesterday, and Thursday, the 20th of November, 2025. So today I'm going to zoom in where this action is taking us. Okay, so we're looking at the action for the past few days. So this very large giant red candlestick that occurred on Thursday the 20th of November, yesterday, is very, it's large red candlestick. It actually engulfs previous 4 candlesticks almost completely, and the real body definitely engulfs the previous 4 candlesticks. So very strong selling. I'll show it to you in a second on the 4-hour chart. Here on this chart, what I want you to look at is this last candlestick from today. So a little bit earlier during the day, the green body of this candlestick was much fuller. So it was like it was gonna close next to the top, next to the highs for the session. But the very last moment, last few minutes of the session, you can see the price pulled back. And again, I'll show it to you on the 4-hour chart in a second. But this is telling me that it's not a guarantee that we are done. There is a very good chance that we are going to have more downside before some sort of a bottom is found. However, notice on this chart that this is the first time we're touching this green support resistance line since 2nd of June, right there where I'm hovering. That was the last time we touched this green line. So we can also look at what level that is. If we, let's say, put an exponential moving average on this chart, so here's the 200-day exponential moving average, we can change it to 50-day exponential moving average, and most likely, I mean, this is, where the price has been touching. So again, notice that we haven't touched this price level actually since even earlier, since like a while back, since like April. Maybe like right there we touched it. No, we didn't even touch it on the 13th of October either. So this is the first time since the tariff freakout that we touched the 50-day exponential moving average. On my chart, using my indicators, you can see that this is the first time we touched the green line since June of this year. So again, this is very, for the current market, which is extremely bullish, this is the strongest selling we've seen in a long time, since April, May of this year. And I don't think it's done. I have a suspicion again that it's not done, just because of the way this last candlestick looks. If the close was closer to the top of the candlestick, then I would say, yeah, most likely we're done. But just the way this candlestick looks, I don't know if we're done with selling. And let me show it to you on the 4-hour chart, and why I always look at 4-hour chart when I try to see more short-term action. So on 4-hour chart, this is again the all-time records here on the 29th of October. And since then we've been kind of making, again, lower lows, lower highs. So again, on 4-hour chart, I'm using a continuous security, ticker symbol US50, US 500 rather, from Capital.com. The reason for that is because I want to see all of the data, including in after hours, that is not shown on regular ETFs. So we've been kind of, bouncing off this blue support resistance line, and in the previous several attempts, so here's one from the 25th of November, the price actually came down all the way to the red line, touched it, and then rallied. Again, we came down all the way to the red line in 14th of November here, and again rallied off of it. But then here on this day, on the 17th of November, we saw a pretty clear breakdown below the red line, a rally, and then a huge, big red candlestick right there on the November 20th. And additionally, there was a rejection at the top here. You can see that it tried to rally above the blue line but failed. Actually, this was the case since November 13th. We had several attempts to rally above the blue line. All of them failed, closed below the red line, and then bounced off the blue. So failed to make a new uptrend, but definitely confirmed a new downtrend. And again, this is a short-term downtrend. Short-term downtrend. 4-hour charts. For each candlestick is 4 hours worth of activity. So we made a new low on today, or yesterday, on November 21st, in the middle of the night. And then today, notice what happened. Again, we bounced, we moved higher and touched the red support resistance line. Don't forget, this is a 4-hour chart. So this is showing me that this line at around 6,657, this red line, will be acting as resistance. And that's the reason why on the daily chart the candle looks the way that I just described. At the very last moment there was a selling. You can see it on this chart, this last, I can go 5-minute chart. So there's that selling in the last few minutes of the session. Where does it leave us? I think we will see a move lower still. So this is a 4-hour chart, so I'm just going to kind of draw it out in again, wave-like fashion. So something like that. I think this candlestick will be duplicated in the downside, so we can kind of measure it. So let's say this. So let's just say that this distance here, what is it, about 200 points. So there is a very good chance we will duplicate this on the downside. So downside target in the short term is about 6,300 for S&P 500. So let's look where that is. So 6,300 is like right there. So very good chance that we will do something of this nature. However, if we get to 6,300, then I think touching this blue support resistance line could be quite possible. If we don't hold here, and doesn't look like we will, I think easily another 7% down, so about 470 points. So if this happens, I think we're looking at like early December possibly, and then we will need to basically assess at that point whether or not a move towards 6100 or even possibly 6300 is enough for us to become interested and buy. Right now I'm not interested in either buying or selling, but if or when we continue lower and we get to the blue support resistance line, I will definitely become interested. Okay, so that's stocks. Let's look at Forex universe again. We're looking at euro versus US dollar. So a few days ago I mentioned that this green support resistance line will act as resistance. So far it has indeed done that, and we bounced off of it on 13th, 14th of November. So euro versus US dollar, don't forget. I think we will continue lower again in favor of US dollar. So I think there is a very good chance that dollar will continue to rally in the near term. So euro versus US dollar, I would be selling this currency pair. Here's US dollar versus Japanese yen, already in favor of US dollar because it closed above the blue line. Very nice move. So again, if you opened, you could have made nice money here. That's 590, almost 600 pips. So very nice move in your favor. Congratulations. So I would hold, US dollar versus Japanese yen again in favor of US dollar. We're looking currently at the dollar currency index DXY, and it made a new 3-year low here in September of this year, and again has been rising in this wave-like fashion. So right now we're basically at August highs. We're retesting them for the second time. So here's the August highs. We tried to get above them in early November, kind of so far failed, and again we're right this instant at that exact highs, trying to pierce through that, and I'm fairly certain it will not hold. So I think we will continue higher. So euro or the dollar will continue higher from here. This by extension implies that that gold will come under further pressure. This is XAU divided by USD. So like I just showed, US dollar is getting bigger, so it could pull this currency pair lower. So record highs here in October, lower low, lower high, kind of in the middle right now, and we're basically trading right around the green line and trying to see if there is resistance at this level. Again, if I'm correct and dollar will continue higher, then gold will continue lower, and I'm fairly certain we'll get to 3,700 for gold, which is another 9.5% to 10% lower. Finally, I wanted to wrap up today with Bitcoin, and Bitcoin is now officially in a bear market. So we can look at it on well, okay, let's put it this way. Bitcoin, technically speaking, trades 24/7. So for Forex and for currencies, we always use the blue and the red line. For stocks, we use the blue and the yellow line. Okay, so just bear with me. So right now we're looking at Bitcoin on weekly time frame, and notice that we have indeed closed below this red support resistance line. We can see the same thing, Bitcoin on daily chart. There it is. We closed below the red support resistance line. This means we're in a bear market. What does that mean? Bear market means that we're going to be making lower lows and lower highs. So now we made a relatively steep low, and it has been pretty much non-stop selling since early October. Lower lows, lower highs, lower highs. So almost a guarantee that we will get a counter trend rally. But the important thing is that this counter trend rally most likely will be something to sell short. I think that we'll be looking at this red support resistance line, which is at around 93,000 rather, and I think we will bounce towards that level. So I don't know, around 12 to 15% bounce. And if we get to this red support resistance line, which is again currently at 93,000, about 94,000, I think we'll need to look at price action and determine whether or not we want to be buying here or we want to be selling short at this point or not. Looking slightly ahead, I think we actually might get a stronger rally because the way the indicators are curving up, we might actually get even stronger rally towards like 106. But even that may not be enough. It just depends how fast this rally takes place. I mean, if we rally, 28-30%, close above the blue line again, no problem. That means we're back in the uptrend. But if we don't and we kind of stall around the red support resistance line, then I think we could roll over and make lower lows. So that's Bitcoin. What do you guys think? Make a comment. Again, make a comment, hit the like button, share, even put a smiley face into the comment section. This will make YouTube think that this is an important video and offer it to more people on the web. That's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up. You can sign up for one of the products. So if you're looking for just getting the indicators, so this green, blue, red, and yellow line, they're available for this interface, TradingView.com. This TradingView.com is free. You just need to open a free TradingView account, and then once you open that, come back to my site, MasterChartsTrading.com. Sign up for one of the packages that has the trading indicators, and I will open the door for you on TradingView.com. It's a little bit convoluted, but it's the only way we could work it right now. So again, another thing is newsletters. I send out daily alerts and weekly members only videos. So again, this week we'll be covering quite a bit of stocks, various ETFs, large cap stocks, and speculative securities. So stay tuned for that. Best deal is to get both trading indicators and newsletters. And the best deal of those two between the monthly and the yearly, of course, is to get the yearly subscription because you get 2 months free. Again, thank you for watching. Have another great trading week. Bye-bye.